What's up, guys? Welcome back to the channel, best place for long-term stock investors. We are back again in this video talking about Top Glove, specifically what? Number one, what's happening? It's down 22%. And then number two, why? Number three, most important, what you can do about it, whether or not you are a shareholder. As usual, before we begin, just want to let you know as a disclaimer, I do not own any shares in Top Glove and I am not a professional advisor when it comes to finance. So please, if you want that sort of advice, speak to an actual professional. Alright guys, if you didn't know, we have a free masterclass just for you where we train you how you can build a 6 to 7 figure portfolio using the power of stock investing. If that's something you're interested in, you can sign up for the masterclass in the comment section or the description. So, Top Glove, not doing very well. It's down 22% in a month, right? Even worse than the ringgit depreciation. A lot of pain. Now, recently they came up with their quarterlies. A lot of people were predicting, how much they were going to make. Very interesting results that I see or opinions around. But essentially what happened, and here are some of the key highlights. When you look on a quarter-to-quarter basis, right, it's down by half when it comes to revenue. Very painful. And then in terms of losses, it's actually in a loss when it used to be profitable. This, I believe, is a first time that Top Glove is having a loss since the mid-2000s, right? Really painful. And so you can see even when year-to-date format, right? This is quarter 4, right? It went from 7.8 billion to 300 million, right? I mean, that's just absolutely crazy. So another thing to take note is that when you compare to August 31st last year, the property, plant and equipment is actually up. Now, why is that relevant? Well, what that means is that a lot of these companies, every company needs to spend money, right, to make money. And in Top Glove's case, definitely true. They've actually spent more money over the past years, but getting a much lower return. That's not a good sign. However, let's investigate further, right? Another thing, inventories. It used to be at about 1.1 billion in 2021. In 2022, that number has more than half. Now, why is that relevant? This is a somewhat debatable point, but inventories can be a sign that the business or the management themselves are not too bullish about the future. So, analyze of that what you will. Operating cash flow, something that we always want to look at. Still positive, which is somewhat of a good sign, but of course nowhere close to the heights of 2021, which is about 7.8 billion. Okay. Another thing to take note is that, if you didn't know, Top Glove has Sukuk bonds, right? They raised money about 1.3 billion back in the day, and they are spending about 50 million for distributions, right? In a way, it's like interest. So, again, these are some of the things happening right now in the company that you ought to know. And the last bit I want to say is that, of course, in 2021, because of what they did, right, the amount of dividends they paid was very big. So at that point in time, obviously, it made shareholders very happy. But as you can see now, maybe they shouldn't have been so aggressive, but that's just my opinion. Let me know what you think. Alright guys, if you're interested in working with us on a private one-on-one basis to improve your stock investing skills, we have the perfect solution for you. That is our Mentorship Program. You can actually apply it in the comment section or the description. Now, key thing is that not every one of you will hop into an interview. Only 20% of you ever get to be interviewed by us. And even if you actually hop on the program, it's an exclusive program. But if you're interested and if you're confident that you can qualify for it, go ahead and apply. So when you look at all the things that are happening, of course, when it comes to financial analysis, there's a lot more you can do. But if you look at some of the key numbers, right, I think it's quite clear to see that they are not just suffering, they are suffering really bad. And they've made decisions in the past that are maybe not, you can say, the wisest. Now, why is it that they're happening? Again, I won't go too deep. I think a lot of you watching this probably already know why. But for those of you who need a refresher or are not sure, these are the 3 basic reasons why this is why Top Glove is suffering. So the first one and the most important one is that oversupply for gloves is actually happening, right? Roughly 40% utilization rate when it comes to the factories now in Top Glove, not where they need to be. It would be great if they can hit 70-80%, but they are probably half of that. And all of this is just a signal that the average selling prices of gloves, rubber or nitrile, is down, right? It's really, really painful. And if you actually go back to the profit and loss statement, what you can see is that when you look on a quarter basis, it went from 2 billion to about 990 million, right? So that's a 1 billion decline. However, when you look at the operating expenses, the decline is only from 1.5 billion to 1 billion, right? So 500 million decline only, less than half of the revenue decline. This is a signal that they have quite a bit of fixed costs and they may not have managed the cost as well as they can. So that's definitely one. And adding to that as well, I believe they are, based on my research, 85 to 90% of their expansion that they wanted to do, back when, glove was all the craze, has been halted. That is really, really huge. And that is why you can see here when the property, plant and equipment, why it has gone up, but the profits has gone down, right? So this is exactly what's happening in real time and what's contributing to it. A lot of, what's the word? I wouldn't say the word hubris, but certainly a lot of overexcitement by the management, at least last year and the year before. Now, the second one is, as I alluded to earlier, the Sukuk, right? 1.3 billion raised in 2020. They actually have to distribute this. So the Sukuk is, essentially is a form of debt. And a lot of this was raised to expand. Now that the expansions are halted, you are paying interest on assets that are not productive, not a good sign. You always want to, whenever you borrow money, to make sure that you invest in assets that can actually make back the money and way beyond. And that's why, it reminds me of a bit like a personal loan here, right? It's really, really painful. It's almost like a Top Glove getting a personal loan to invest in something. And then 1 year later, the thing is not quite there anymore. Of course, the third one we can allude to or bring you to our previous videos where we talk about glove stocks. Top Glove engaged in a lot of buybacks, whether it's they genuinely believe it was cheap at that point in time, this year, last year, and even 2020, or it's because they just want to support the price as it was declining. We will never know, but what we do know is that the huge amounts of millions that they've spent on buybacks is now worth a lot less. And so all of this taken into account has given the market, institutional or retail investors, a lot of unhappiness. Hey guys, enjoying the video? If the answer is yes, remember to like, comment and subscribe. Click on the notification bell so whenever new videos pop, you'll know it fresh. Now, if you go online and do research, read other people's posts or analyst reports, you get all sorts of discussion, right, regarding where is the ASP heading, whether or not the Sukuk, the terms of the Sukuk and things like that. All these are great to learn, but I think what is missing right now, the discussion, is what are your options, right? What can you actually do depending on your circumstance? Now, obviously, I don't know everybody's circumstance, but here are the big ones that I assume that a lot of you are experiencing, and that is this, right? Far too many people are focusing on what is happening right now, in my humble opinion, right? And this is an issue because you may do what we call, or you may engage in what we call recency bias. You're taking what has happened recently or in the recent past and then extending it into the future. And all of this can actually lead to overreaction, which is not something that you want to engage in. What you need to, so right now the market is talking a lot about the industry dropping, things getting more competitive, China's coming in, Thailand's coming in, and things like that. The question you have to ask yourself is, what will the future look like? And so companies like the glove industries tend to operate in cycles. they've period where they do really well, and they've got periods like right now that they are suffering. And so, of course, each cycle is a little bit different. You need to ask yourself, well, is it sustainable for China and Thailand to compete with Malaysia? Does Malaysia still have the edge? And if the answer is if the answer is yes, well, you might think that right now is a bit of an overreaction, right? I'm not saying that it is, but you might think that way. And the prices have dropped a big amount. A lot of, certainly other glove companies have a lot of cash, and the valuations are looking statistically attractive. Maybe it's time for you to consider, relooking at it. Again, you can have the alternate opinion as well, right? That you will continue. That's fine. But the key is that you want to be in a uncrowded area. You don't want to engage in a crowded trade. And right now, what looks like crowded is that gloves are going to hell. So that's probably an opinion that you want to stay away from a bit. You can think that gloves won't do well, but certainly don't think that it's all going, it's becoming toilet paper, so to speak. Now, if you're holding the stock, right, but it's a small percentage, don't spend too much time thinking of it, right? It's just a small amount. Either you let it run, or if you don't really want to have gloves in your portfolio anymore and it's a small amount, just sell it. Now, of course, the big question is what happens if it is big, right? And some of you all bought it at the top or close to the top. Now maybe you're down 50, 60, even 80%. How do you feel about it? How should you feel? How do you think, and what can you act on? If it's a big amount, always think about opportunity cost, right? Even though you're down 50, 60%, but if there is other investments that can make you 40, 50% in a quicker amount of time, reasonably when it comes to risk, then maybe you want to start hopping over there, right? Because what I can say for sure is that losing out in this case is going to be worse than cutting loss, right? Cutting loss is something you need to be comfortable with, because you will invest in stocks that will not do well in the future, right? Going forward, you will still fail going forward. What you want is to fail better, right? And so failing better means when you have made a mistake, assuming that Top Glove is a mistake, cut it. If you know it's a mistake, there's certain things you don't like about the company, but you are still there saying, no, but I need to recover back my costs, just cut, just shift, right? You do not want to engage in loss aversion. You don't want to make the loss more, the feeling of losing more painful than the feeling of gaining. So it's okay to take the L, as we call it. No shame. Now, if the answer is no, right? If you feel there's no other better opportunities for various reasons like valuation and the bull case for gloves is that it's cyclical, it will come back. Again, not here to say which side I'm on too much, but if that is your opinion, you need to be rock solid with your thesis, right? You have to think hard about ASPs. Can they go even lower, as I talked a lot about earlier on? Management quality. You see, you can describe the industry and you can say the industry is in a down cycle, you eventually come up. But not all stocks will do the same, because there are different kind of glove companies, different capacities, different management. Then the management have different capital allocation strategies. These are something that you always want to consider. And the last bit, which I think people should consider more, is market sentiment. So if, let's say, you are very confident in Top Glove or any stock glove stock for that matter doing well, and you might be right, but you may not be right in the short term. And so you can actually take advantage to say, hey, I believe I'm right, but maybe now is not the time to hold on to glove stocks, and I'll move on to other stuff first. Then only get back to it when you can see that the sentiment has quieted down, when no one is talking about Top Glove and things like that. Then that's probably when you might want to re-enter. Now, when that is, of course, no one knows, but it's something that you should be paying attention to lah. And the last bit is, if you're on the sidelines, right, you might be tempted to do all this. And of course, I've said earlier on, right, reasons for and reasons against getting into glove companies. But here's the big benefit that you have as someone sitting on the sidelines. You don't have to make a decision, right? Even though it's the talk of the market, It's, always draws the eyeballs and discussions. You don't have to participate in it. You can just ask questions, learn a little bit here and there. You don't have to put money into it. So guys, I hope you enjoyed this session. Let me know if you agree with my analysis. Always interested to know what you guys think. Follow us on our social media. Go watch some of our other videos, whether it's stock analysis or other quick dives. And I look forward to seeing you in the next video.